Hey, it's Doug Tabor checking in from beautiful East County, San Diego. This is my San Diego rental market update for January 3rd, 2025. That's right, 2025 is here. Don't know about you, but I'm not going to miss 2024. It's just kind of one of those things like don't let the door hit you in the butt. I'm already broke my New Year resolution, which was to not look at the news so often, but it turns out that hasn't happened, and there's a lot of news out there to be had. On the local front, turns out the city of Carlsbad is going to implement a no smoking ban, which is great. You know what? Nobody wants to smell that cigarette smoke and that marijuana smoke. However, if you're a landlord and you own rental properties, you're going to have to help enforce that ban by notifying your tenants that they can no longer smoke at the property. Just another rule that's going to cause the independent landlords out there to have to do more work, as if they don't have enough rules to have to make their tenants follow as it stands. Let me just check in here. It looks like you're cutting off my own head here. As we kick off 2025, the big news is interest rates have not really cooled in 2025. So far, they're hovering right around 7%, just over 7.1% as we kick off the new year. And, that's a big challenge with the market right now, is that everybody's waiting for these interest rates to cool down. But the reality is, even with the Fed dropping the Fed funds rate, it has not caused 30-year fixed mortgage rates to come down. We've been kind of hovering above and below that 7% mark for the last several months. And not sure if that's going to change. Hopefully it does. Even with the sentiment of the Fed funds rate dropping, it caused an increase in real estate sales as well as refinances. So people hear that the Fed funds rate dropped, even though it doesn't affect that 30-year fixed mortgage rate. That's primarily the bond market that affects that. But it gives people the motivation to go out and possibly refinance or purchase a property. So interest rates, huge impact on the purchase and sale and even refinance of real estate, obviously. Very important. Market velocity is actually closed out the year pretty strong, at least in the single family market. I track single family rentals as well as the multifamily properties, and there was quite an uptick in transactions in December, last 30 days of the year. A lot of single family properties got sold, so that's good. The real estate agents needed that boost. It's been generally a slow year across the board, so seeing that market velocity towards the end of the year certainly helped and could propel us into 2025. I have seen property values kind of soften a bit towards the end of the year. However, when I compare the numbers from the beginning of the year in 2024 to the end of the year, we did see an increase. For instance, single family homes, the median price dipped $34,000 over the last 3 months. It was at about $1,030,000, $1,040,000, and it closed out the year at $1 million, which is the median home price for San Diego County as a whole. However, that's up from $855,000 in 2023. So it's almost a 15% increase over the course of 12 months for San Diego County. For the 2 to 4 unit properties, the duplex, triplex, fourplex properties, we actually saw about a 10% decrease in the price of those properties. We were closing out the year at right around $437,000 per unit. And that was actually higher about 12 months ago. So strangely enough, and those are, I sell a lot of those. I'm surprised that there was that decrease, but that's where the numbers are at. And then for the larger apartment buildings, 5 or more unit apartment buildings, even though it was kind of a soft year all throughout 2024, we did see a final increase towards the end of the year, $346,000 price per unit. There's lots of other gauges I could use. I could use cap rates, I could use GRM, but price per unit's a pretty standard benchmark. $346,000 price per unit for the 5 or more unit apartment buildings. The beginning of the year is $303,000. So surprisingly, we were able to see an increase towards the end of the year. And the other items I track certainly are important. The big one is annual rent growth. And as a whole, the market's stagnant. It's about 0.7% annual rent growth looking back over the last 12 months. And that's going to be the big news of 2025 is, are we going to have stagnant rent growth, or are we going to have increased rent growth? And, basically over 2024, it was very stagnant. There was not a lot of rent growth. And we are certainly looking for that to increase for 2025, hopefully. The thing with San Diego is there's just not a lot of building. There's not a lot of new product on the market. We've got a desert to the east. We have a ocean to the west. To the north, we have my old home, the United States Marine Corps, Camp Pendleton. And then, of course, we have an international border to the south. So, we're kind of in a box in a sense. And that's good for home prices because there's just not a lot of new properties. We still hover around currently the 5% vacancy rate. That's actually high for San Diego County. Usually there's like a 3% or even less vacancy rate. So hovering around that vacancy rate. Average asking rent for a 2-unit property, $2,486 a month. So we still have strong rents. They just haven't gone up. So that's my report for the San Diego rental market update. I will continue to try to do these updates on a regular basis. I am going to expand and start doing these at a national level. I'll probably start by tracking the top 25%, the top 25 markets across the country, investment markets. But if you have a specific market that you want me to dive into and do an analysis, just put it in the comments and I'll be happy to do that. Again, like and subscribe. Always helpful for the channel, and I look forward to bringing you more data that's helpful for your rental business in 2025. It's Doug Tabor. Talk to you soon.